Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Friday, July 15th, 2022, coming at you on the last business day of the week. And we saw stocks rebound a little bit today. Earlier in the week, we had 4 straight days of losses, and we saw good earnings today from Citigroup Bank. We saw a lot of the financials rally with that, and we saw stocks across the board rebound after a pretty rough week. So let's get into it. U.S. stocks rallied Friday to cap a 4-day losing streak on Wall Street, and the article credits that the sentiment was buoyed by better than expected retail sales data and a surprise earnings beat from Citigroup. So the S&P 500 was up almost 2%, the Dow was up a little over 2%, and the NASDAQ was down just under 2%. So Citigroup, unlike some of the other banks in the industry, had really good earnings. They saw 11% jump in revenue from the prior period to $19.64 billion. And their stocks gained a lot, and a lot of bank stocks gained a lot, which is probably why we saw the Dow up higher than the NASDAQ and the broader market, because the Dow is heavy financials, and they did really well today. So you kind of see here that when those disappointing earnings came out from JP Morgan and Morgan Stanley, that the whole industry kind of fell. So Citigroup kind of fell with them, and then it kind of popped after their earnings, just around to the levels that they were at before. So no real change in the week with those. Let's zoom out a little bit. Let's zoom out to 6 months. Yeah, they're still in a downtrend. So nothing really too major to look at there. And then they go back to yesterday. Meanwhile, on Thursday, the JP Morgan CEO Jamie Dimon cautioned in his post-earnings remarks that the U.S. economy appear nearer than they were before to extreme risks. And he went on to go and talk about never-before-seen quantitative tightening. And we'll have to see. I mean, he is kind of alluding to something that is looming in the broader markets, and that is, how committed can the Fed stay to tightening the economy this tightly before something breaks, or until they're forced to ease up again because of a recession. So we'll have to see. The Fed has 3 mandates. The first one being that to control inflation, which is really what they're focusing on now. The second mandate is to have full employment, which more or less they have right now. And the third is to be the buyer of last resort and for just economic stability. So even with high inflation, if they start tightening the economy to the point where we're in a recession and job numbers are getting worse, unemployment's going up, and we see the economy start to break, then even if there is still red hot inflation, then they would probably have to ease up a little bit, and that's a tightrope that they're going to have to walk these next couple months. So and we saw this yesterday too. The Federal Reserve Board of Governors member Christopher Waller said Thursday, we talked about this yesterday, that he's open for an increase of 100 basis points in the interest rate. So that would definitely be in line with a hawkish Fed. And then the JP Morgan CEO, he was going on to say that there's a variety of outcomes, and it just depends really what the Fed ends up doing. Retail sales rose more than expected in June, so that's kind of signaling that consumer sentiment is rising, but that's more of like a reactionary number than an actual intrinsic number that you can look at. Just because consumers are feeling a little bit better this month doesn't necessarily mean the economy is getting better. But we did see that rise. Even with inflation rising really high in June, we saw consumer spending also rise. So that's a really interesting statistic. But let's hop into the market right now. So the S&P 500 was up today. We opened higher, and we kind of just stayed that way the whole day, kind of flat, and then bought a little bit more at the end of the day. So If we zoom out, let's zoom out to the 5-day. Let's just to get a look at the week here. So that's not the 5-day. That's frustrating. Well, never mind. Let's go to Bitcoin. So Bitcoin, this is the trend line that we drew yesterday. It's still in this range down here that we had for this week. So we'll get some direction on Bitcoin soon. If 17,000 was the worst and we go up from here, then this was a really good buying opportunity. But I'm just not too sure yet on Bitcoin. I don't think there's any price movement on the chart saying that we should go bullish at this point. At this point, the trend is your friend, and the trend is saying that we're still going down. So you really don't want to fight against this trend. We've been selling heavily since November, and there's been a lot of rallies in there since then. Like a lot of people thought right here that was the end of it, and we sold off even harder then. So Bitcoin's in this range. It's something to watch. We'll go over it more this weekend as well in our weekly wrap. Just wanted to get this daily dose out to you guys. And if there's anything you want to see in the daily doses from now on, let me know. I've kind of just been broadly wrapping what happened in the financial world and then covering stocks and Bitcoin. So if you guys want to see something else, let me know. Make sure you support the podcast, subscribe on YouTube, and we'll see you for the weekly wrap this weekend. I'll be sure to get that out. And I'm working on a new project as well. I'm really excited. I'm not going to announce it yet, but there is another project that will be coming out soon, and the weekly wrap will be coming out this weekend again. So again, thank you for joining us this week. Everybody have a great weekend, and I will see you again in the weekly wrap. So thank you, everybody.